So this whole idea that you can just print money as a way to create wealth and prosperity, it's not a viable strategy in my opinion. The only thing that creates wealth in a society is the output of goods and services that people want. You can't try to play games with that by creating all this fake, phantom money that does not represent a real increase in goods and services or productivity. So what we've seen the last couple of years, we've had $10 trillion, $10 trillion of money printing. So why did they do that? Thought they could stimulate their way out of the COVID recession, and that they, induced with the lockdowns. That's why it happened. Maybe the lockdowns were not such a good idea, folks. That is what the experts are saying now, and no scientific data on record show that they worked. So they thought they would, stimulate the economic activity by printing money, and maybe more cynically thought it would be good for the midterms. Both parties are guilty of that. So maybe they had good intentions, but they were wrong. They were wrong. And the last administration, this current administration, both parties have spent like drunken sailors. So, if we look at the asset validations, are not only in stock markets and real estate, they're in commodities, they're in bonds, even in old collectibles like art, music, wine. I mean, my God, even sports collector cards, which last peaked in 1989, have exploded again. So take a look at this chart. Shows Bank of America's high yield spread for the lowest rated junk bonds. The spread is the amount by which these bonds yield more than the treasury debt of the same maturity. So you can think of it as a measure of excess risk. So how much riskier than Uncle Sam are these low-rated companies, folks? Incredible. So here's a variation of the Fed balance sheet graph with the Bank of Japan's assets. Japan has been doing what North America has been doing for the past decade, but they've been doing it for 30 plus years. The Bank of Japan was buying everything in sight. So if you look at the graph, the blue line represents the U.S. Fed, and the red line is BOJ's assets. It's incredible. So the Ukraine war does not even make the top 10 list of what American consumers are concerned about. What do you think's number one? What are Americans concerned about in surveys? High inflation remains at the top of consumers' minds. The recent drop in sentiment was largely driven by continued negative views on current buying conditions for houses and durables, as well as consumers' future outlook for the economy. Primarily due to concerns over inflation. So the all-knowing oracle, Elon Musk, just stated, take a look at this, he foresees a recession being a good thing. It's been raining money on fools for too long, yes, but this is actually a good thing. He thinks some bankruptcies need to happen. Musk also tweeted all this COVID, at home stuff was, tricking people into thinking that they don't actually need to work hard. He thinks a rude awakening is inbound. So I think this guy has a better understanding of macroeconomics than the politicians and some so-called economic experts. Like I said before, the Fed has more economists than anyone. I think some entrepreneurs and VC guys, gals have a better understanding of macroeconomics. Musk understands macroeconomics. He understands what an economy is. I mean, I learned what an economy is in Economics 101. An economy is a trading system for the production of goods and services. And I think Musk brilliantly describes in an interview I watched perfectly. Take a look. If you were to go to a desert island and somebody gave you $1 billion when you're sitting on that island, you can't buy anything. Does not make you wealthier. What makes you wealthier is the production of goods and services people want, and that is what an economy is. Money is just, the accounting system. So if you print, and I've been saying this, a lot of money, it just debases the accounting system. It does not make anyone richer. So take that 10 trillion, that That 10 trillion goes into the economy, no corresponding increase in output of goods and services. Two things are going to happen. You're going to, number one, you're going to get asset bubbles in the stock market. And number two, price levels rise and we get inflation. What do you think we're seeing now? So the way both these things come crashing down is the Fed looks at this inflation. They all sit around the table having their Danish. And suddenly, hey, we got to jack up the interest rates. What's that going to do? That's going to pop asset bubbles. It gets rid of about 14.9% of global wealth. And simultaneously, workers feel poor because wages have not kept up with inflation. Simple. That's what we're seeing right now. So now everyone this last week is talking about this new thing. It hasn't been in the media as much as the CPI. Everyone is jumping up and down about the PCE gauge that shows maybe price pressures could be peaking. The U.S. inflation rate as a measured by the Personal Consumption Expenditure Index rose just 0.2% in April for its smallest monthly increase in a year and a half, largely due to a decline in gas prices, while gas prices simultaneously rebounded. Did you hear what I said? So there were other hints they said as well that the surge in inflation might be abating. So did you hear that, folks? Gas prices declined and then subsequently rebounded. Sounds like a wash to me, right? So here's the reality. U.S. gas prices bounced to a fresh record high again Sunday, touching an all-time peak of $4.61 per gallon. That is more than 50% higher than the cost of a gallon a year ago. So you take California, the average price of gasoline in California on Thursday set a new record at $6.06 per gallon, blowing the national average of $4.61 out of the water. So the prompt price surge came as tens of thousands of Memorial Day weekend holiday makers hit the road to enjoy some time, family and friends after 2 years of coronavirus uncertainty. We still have uncertainty. So what is this PCE? The PCE stands for Personal Price Consumption Indicator and is the Fed's preferred measure of inflation. The Federal Reserve, as I said earlier, always prefers the PCE Index to CPI, but majority of people know, the CPI. So CPI is basically a better known economic indicator. The Fed still chooses the PCE as its favorite index when it looks, at the condition of the economy. So the PCE helps the American central banks to determine its plan of action, which, influence, anything from employment, inflation. So the bottom line is, it is a narrow measure of inflation, but it omits volatile food and energy costs. Known as the core, PCE. So, it rose in April and for the third month in a row, and that was in line with Wall Street's forecast. So, majority of Americans have never endured such high inflation right now, and it's caused plenty of angst, from Main Street to Wall Street to K Street. So, and some people are candidly saying it's worse than the 70s. So consumer sentiment mirrored a 10-year low amid, persistent inflation. And that's a University of Michigan survey I found. So in a bid, to quell this inflation, the Fed is moving swiftly to, it could be a little too late, rise key short-term interest rates that it kept near 0% during most of the pandemic. The resulting increase in interest rates, if you see right now on cars, mortgages, and businesses lending, is likely to slow the economy. Though the Fed officials maintain they can bring down inflation without triggering a recession. We got one negative quarter of growth. So my question to you folks is, do you believe the Fed? Look at their past behavior. I'm a skeptic. So whether the surge in inflation starts to peter out soon is still an open question, in my opinion. The war in Ukraine has pushed up prices of oil and other commodities, while recent lockdowns in China have exacerbated supply chain issues that have contributed heavily to the highest inflation reading in decades. And maybe China did that purposely to mess up supply chains. If you watch the videos, what they're doing over there, it's pretty frightening. So whether the surge in inflation starts to, be reduced like I said, is still an open question from everything I'm reading. And what the so-called experts are saying too, you can find them out there, they're concerned. So I read this interesting book on called Capitalism, Socialism, and Democracy. The economist and political scientist Joseph Schumpeter. He's one of the most accomplished economists of the 20th century. And I recommend this book, and I'll include it in the video link. He coined the term creative destruction. It's the idea that in a capitalist society, the old way of doing things is constantly getting destroyed or supplemented as it is replaced by a newer, better alternative. So one of the lovely things about the free market capitalism is creative destruction. Creative destruction, essentially, it's just another term, folks, for innovation. Look at Elon Musk. The cycle time of creative destruction in this country has never been faster, folks. The author, argued that capitalism not only never is, but never can be stationary. Despite this, he warned that the success of capitalism that we've had in this country would eventually lead to corporatism. And that's what we're seeing right now, a corporatism mindset that was more focused on playing it safe. Government takes control of everything and even becoming hostile to the innovations offered by entrepreneurs and businesses. And that's what we're seeing right now. All these guys and gals that are flying around their jets made money off capitalism. Now they want to stifle you. So I would argue that Washington and the Fed need to start bringing in us entrepreneurs and VCs into their meetings in K Street. I think we might have a better understanding of macroeconomics, right? That's what I think. What is wrong with sharing ideas unless this is all done by design? Creative destruction unleashes the true power of an organization because it is focused on continuous improvement in all aspects of doing business. Innovation is the economic engine, not printing money. Just look at Elon Musk. And I know they know that in their heads and hearts. Why are they doing this? Capitalism works. A few companies that were making some moves this week, take a look. On a lighter note, Big Lots. They said big lot shares sank 12.1% after the big box office retailers swung to a surplus loss sales. Gap rose 4.3% after the clothing retail reported a wider than expected loss, anticipating forecast. And Costco wholesale. Costco raked in $1 billion more than expected in revenue in its last quarter, but missed on same-store sales. So shares ticked up roughly 1.2%. Dell Technologies shares jumped 12.9% after the computer equipment maker reported higher first quarter sales and lower operating expenses. So that's good news. Gold, rose roughly 0.2% to settle at $1,851.30. I bought some a while back. I hadn't made too much money, but I don't have that much. Bitcoin was off about 2%, 28,863. I bought some under 29 again. So looking ahead, folks, whether the surge in inflation starts to peter out soon is a big open question, big time. Don't get too excited about the PCE. The slowing in inflation is very welcome. Look between the lines. They're saying that, folks, the train is still going down the tracks at 80 miles an hour. That's from economists and myself. Although headline inflation is likely to jump again on a monthly basis in May with another big spike in energy prices. So I still have heartburn. Inflation is likely peaking on a year-over-year basis in the spring, but it is still well above the Fed's 2% objective. So I think private markets are going through a reset right now. My opinion, everyone only talks about stimulating demand. You don't hear anyone talking about production. Wealth comes from the production of goods and services people want. We are in for a lot more pain. I'm bullish that entrepreneurs solving big problems will continue in Washington. Hopefully, they'll start inviting entrepreneurs more because entrepreneurs seem to be solving the big problems. And I think it's important, the sharing of ideas. with everyone. And some people, you know, you think this is done by design with the energy and everything that's going on. I don't want to get into that argument, but it's very concerning right now because we're a first world country. We have the most innovative people and minds and technology. And what I'm hearing about macroeconomics and my own learnings and my own studies, I mean, that we need to start bringing some VCs and entrepreneurs into these meetings. I think they could clean it up in about 2 weeks. So just want to give a holistic perspective, curtail to the micro on, you know, the PCE. You know, I'm not too bullish on it right now, what I'm seeing between the lines in the data, but I'm an optimist. Have a great week. Take care.